Alright, for this video we want to go over a simple example of how to prepare a California resident income tax return, Form 540. So in this scenario we've got the CA resident return here, and it's part of a full 1040 as well. So before you start preparing your California resident return, you should do your federal return first, and we'll see why that's important later. So in addition to these two pieces, I do have one slide here covering the fact pattern, so the background on this sample taxpayer that we're going to be looking at, and then some specific California notes that we should be mindful of in this scenario, because there's some things that are treated differently for California purposes than federal tax purposes. Alright, so first I want to run through this slide, cover the background, the notes, and then we'll look at the 1040, the federal return briefly, and then we'll jump into the California return last. So here's the fact pattern we're working with. We have our taxpayer here, Adam Q. Taxpayer. He is a single filing taxpayer and a full-time resident of California. So Adam works full-time as a consultant, and his salary is $84,000 per year, so he gets a W-2 that shows those amounts. And he had federal income taxes withheld on those wages of $8,400 and California state income taxes withheld of $5,000. Now, in addition to that, Adam has a U.S. bank account which paid him interest income of $100. He also has a brokerage account where he invested in some stocks, and so that paid him qualified dividend income of $250 during the year. And then he had some short-term and long-term capital gains and losses on the sale of stocks. Now, Adam also invested in municipal bonds. So he has a Florida municipal bond that paid him interest income of $47 during the year. And he also invested in some U.S. treasuries, and those paid him $75 in interest income during the year. Now, Adam's also covered by a health insurance plan at work, and it's a high deductible health insurance plan. So Adam is eligible for making HSA contributions, so he made a $1,000 contribution to his health savings account during the year. And then lastly, he is going to be claiming the standard deduction for both federal and state tax purposes. So Adam doesn't have any itemized deductions, he's just going to claim the standard deduction. Now, what are some important things to remember for federal versus California tax issues? So, firstly, the forms that we're going to be completing California, on the California side, the Form 540, so this is the individual's resident tax return, and we're going to have some federal to state tax differences. So, in order to make those adjustments, we need to complete Schedule CA540. And then lastly, we're going to have to complete the Schedule W-2 for California. And this is a wage and tax statement that goes along with your return, and it effectively has the same numbers that you would find on your W-2 that was provided by your employer. Now, the first adjustment we're going to note is the HSA contributions. So contributions to an HSA are generally deductible for federal tax purposes, and we'll see this on our Form 1040. But California doesn't conform to this adjustment. So on the adjustment schedule, we're going to have to make a change for that contribution because it's not deductible for California purposes. Municipal bond interest income is another adjustment. So municipal bond interest is generally exempt from federal income tax purposes, but it could be taxable depending on where you're a resident. Now, California doesn't tax municipal bond interest on obligations that are from California. So if you have California, the state, or a county or other municipality in California issuing the bond, that interest will be tax exempt for federal purposes, and it will be exempt from California purposes if you're a resident there. But California will tax municipal bond interest earned from other states or municipalities. Now, because Adam is invested in a Florida municipal bond that's paid him some interest during the year, California is going to tax that because he is a California tax resident, and those are bonds issued by non-California municipalities, counties, or the state. Now, the capital gains and dividends that Adam has on his 1040, for federal purposes, we get preferential rates on qualified dividends and long-term capital gains. There's no distinction for California state purposes. So in other words, capital gains and dividends, whether they're qualified, non-qualified, long-term, short-term, they're all going to be taxed as ordinary income for California state purposes. And then lastly, all these adjustments, again, are going to be reported on the Schedule CA540. And then when we look at our ultimate tax computation, and we'll see this when we look at the 540, if your California taxable income is more than $100,000, you use what California has as a tax rate schedule to calculate your tax. And if your income is $100,000 or less, you use the tax tables. And we'll look at those tax tables as well. All right, so now let's have a look at the 1040. I want to go through the 1040 kind of quickly because, again, the focus is going to be on the California 540. So Adam Taxpayers, page 1 of his 1040, we can see here the key amounts that he has in the fact pattern there. So the $84,000 in taxable wages, that comes from box 1 of his W-2. And then in the investment income section, we see line 2A, there's the $47 of tax exempt for federal purposes, Florida municipal bond interest, and then the taxable interest and qualified dividend income, $175 and $250. We can find those details on Schedule B. So if I look at Schedule B here, we have his bank account interest income of $100, the U.S. Treasury bond interest income, $75. Again, remember, Treasury interest is subject to federal income taxes, but it's exempt from state income tax. So we're also going to see an adjustment on the California return for $75 that is going to be exempt from from state income taxes because it's a federal interest amount. And then California will subject to that municipal bond interest again. And then the ordinary dividend income, $250, and then the qualified piece is reported on page 1 of the Form 1040. Now, the capital gains or losses just reported on 8949. So we've got the short-term amounts here. So we sold some Pro Shares, ETF, got a short-term loss there. And then the long-term portion, $700 on the sale of some Vanguard funds. All right. Now, in addition to those two items, the other last piece that we have is that HSA deduction. So the HSA deductions, the contributions, and the deductible amount is reported on the 8889. So if we jump down here, we can see his HSA form, and we can see here that he made a $1,000 contribution. He has self-only coverage, and so he's going to get a $1,000 HSA deduction that is reported up here on Schedule 1. So Schedule 1 in Part 2, we have adjustments to income. We have his $1,000 HSA deduction. All right, so that covers very quickly the federal return. Now let's start to get into the details on the California tax return. So if I jump to page 1 of the CA 1040, and again, remember, it's very important that you complete your federal return first, and here's why. California, like many states, don't include all the same details that you would have on your federal return. The starting point in calculating your taxable income is your federal AGI. So we can see here, line 13, enter your federal AGI from Form 1040. Our AGI is $83,359. And then you have California adjustments, either subtractions or additions to income, to arrive at your California adjusted gross income. So that's why, practically speaking, you cannot do a state return for most states until you complete your federal return in its entirety. Now, what elements need to be completed up here? We have the Social Security number, or ITIN, for the taxpayer, Adam Q. Taxpayer, the address, and then the date of birth for the taxpayer is entered on page 1 as well. So in the principal residence section, if you are living at the same address that you have as your mailing address, you can indicate here using this checkbox. If that's not the case, then enter your actual principal or physical residence here. In our case, Adam Taxpayer lives at the same address as his mailing address, so that's why he's left this section blank. Now, filing status, again, he's a single filing taxpayer for federal purposes. He will be a single filing taxpayer for California as well. It is possible to have differences, so as this question notes here, right, if your California status is different from federal, check this box. So when would this happen? Normally in these cases where RDP, so if you have a registered domestic partnership, for federal purposes, there is no such thing, right? You're either married or unmarried. but for California state tax purposes, and a lot of states, they have this RDP option for taxpayers. And so you could, in certain circumstances, be single for federal, but then maybe be in a registered domestic partnership for state tax purposes. Now, moving on down the form, we don't have any dependents, right? And nor is Adam able to be claimed as a dependent on another return. In the exemption section here, pretty straightforward, right? If you check box 1, 3, or 4, enter 1. If he checks 2 or 5, enter 2. In this case, he's single filing, so he's got one exemption, which is going to be a $140 amount. And again, in section 10 here, no dependents, nor is he able to be claimed as a dependent. So there's no exemptions amount related to any dependents. Now, box 12 is asking us to enter the state wages from federal forms W-2 box 16. If you look at your W-2, you'll have the federal amounts listed, boxes 1, 3, and 5, right? And then at the bottom of the W-2, there's going to be a state portion. And then in there, you'll have your state wages that are listed on the federal W-2 that was filed with the IRS. So in Adam's case here, it's the same amount. So $84,000 is his federal wage, and the same amount for state income tax purposes. So again here we are starting with line 13, the federal AGI, right? This is our starting point. So the $83,359, that is pulled from our adjusted gross income amount that we find on page 1 of our 1040. And then remember, we have adjustments because we have some income and deduction items that are treated differently for California tax purposes. So those adjustments are pulling through from Schedule CA540. So let's take a look at the Schedule CA540, and then we'll go through these adjustments one by one and then see how the net amounts flow through back to that California Form 540. So the adjustment page works left to right, right? So the federal amounts are listed in column A. So these are the amounts pulled directly from your federal Form 1040. And then you have either subtractions or additions to those amounts to get at the adjusted California balance. So for example, the federal amount of our wages, $84,000, we don't have any adjustments either up or down to this amount because it's going to be the same amount for state income tax purposes. The same goes for the ordinary and qualified dividend amounts. Remember, qualified dividends isn't really such a thing for California. It's all treated as ordinary. But we're not adjusting this gross amount up or down because there's some state variation. What we do have adjustments for, and this is the first one, is the interest income. So $175 is the total amount of taxable interest income for federal income tax purposes. So that's the federal column here, $175. Now remember, that $175 amount is the bank interest income and then the U.S. Treasury interest income. But for state income tax purposes, the interest income that is subject to tax is just that regular ordinary interest income and any municipal bond interest income that is coming from states outside California. So the Treasury interest income, again, is taxable at the federal level, but it's not taxable for California or other state tax purposes. So we have a subtraction for $75, right? $75 is the amount of interest income invested in the treasuries. And then we have an addition for $47, which is the municipal bond interest coming from Florida. So the net amount of adjustments here is going to be the $175 minus the $75 plus $47. So in effect, the amount of taxable interest income we're going to have for California state tax purposes is $147, right? That's going to be the net amount that's actually subject to tax in California. And if we want to do a common sense check here, you can always go back and look at your federal return. So if we look at Schedule B, for example, we can see, okay, I've got interest income, 100 from the savings account, 75 from the bonds, 175 is going to be the total, and then I know I have $47 of interest income coming through from the Florida municipal bonds. So I know that, well, at the end of the day, after all these adjustments happen, I should have a net amount of 147, right? savings account interest, $47 in municipal bond interest, and it excludes that $75 amount. All right, so if we jump back up to the California adjustments page, so we've got the subtraction amount there, that's correct. We've got the addition, right, the add back of the municipal bond interest. Capital gains or losses, the net amount of loss is $66. No adjustments there because there's no state, federal tax differences for that component. If we keep scrolling down here, we can see the totals on line 10. So we have the total amount of subtractions is going to be 75. The total amount of additions for this section, for section B, is going to be 47. Then we move on to section C for adjustments to income, and here we see the HSA adjustment. So from the Federal Schedule 1, Form 1040, we have a health savings account deduction of $1,000. Again, remember, the California does not allow this. They don't conform to this kind of deduction. So we have a subtraction or a reduction to the expense of $1,000. So this effectively wipes out that amount for California state tax purposes. Then after all those adjustments are made, we get the absolute totals down on line 27. So here's what's a bit odd about this schedule and how the instructions kind of want you to report this. We have the subtractions column in column B, we have the additions column in column C, and these are separately stated. In other words, we don't net those two amounts there. We have to report them separately on line 14 for the subtractions and line 16 for the additions. Now, what the instructions say is that if you get to the bottom here and you have any negative amounts in any columns, you have to report them in positive amounts on the other column, right? So the subtraction column is a net negative, which means that effectively this is an addition, and this gross amount should be added to the additions column. So $47 plus $925, right? If we do that little math here, $925 plus $427, $972 is going to be the adjustment, and that's going to be a net addition adjustment. So when we look at the Form 1040, sorry, not the 1040, the 540, this adjustment section, $972 as the net adjustment is reported as an addition. So we don't have the subtraction amounts here. Now, if you did put the subtraction amounts there, the negatives, and then you had the $47 addition there, you know, the math would all work out, right? You would still get California AGI of $84,331, but California might send back the return if you paper filed it because they don't want to see negative amounts. They want to see, you know, just the absolute value of those amounts. And if you try to e-file it, you probably get a rejection notice as well. So the instructions want it reported this way, so that's why we go ahead and do it in that sort of fashion. Now, for the standard or itemized deduction, right? So we are not itemizing deductions for either federal or state tax purposes. So in Adam's case here, he can simply report the standard deduction for the 2022 tax year is $5,202. So we have $5,202. And then we get our net taxable income for California purposes of $79,129. Now the tax computation, right? So line 31 gives us a couple options. FTB 3800 and 3803. These schedules apply when you have children that have unearned income, so investment income, and you're trying to figure that tax on your personal return. Because there's different rates that apply. In our case here, we don't have any dependents, so he's not going to have any dependents with investment income. So those two don't apply here. We just have the tax table option or the tax rate schedule option. And because our taxable income is under $100,000, we use the tax tables to calculate our tax, which is going to be $4,110. So how do we get that number? If you go to the California tax tables, so these are in the 540 instructions, the tax tables, you find whatever range your taxable income falls within. So in our case, we're looking for $79,129. So if we scroll to the page and look for the column where our taxable income is at least that amount, but not over that next threshold. So we're working with $79,129. So if we go down here, we can see, all right, here's 79,051, 79,150. So that's the range we're in. And then we are in the first column here, right? Our filing status is single. So our tax is $4,110. And that's why we put 4110 there. Now, we use tax prep software to prep these, and so obviously the software is very nice. It pulls this for us automatically. But if you were preparing these by hand and you weren't using software, that's how you would look up the appropriate amount of tax based on your taxable income. Now, the exemption credits, right, we're a single filer, just one person, no dependents. So our exemption credit is the $140. We saw that coming through on page 1. And so the net amount of tax that we owe for the year is $3,970. Now, the credits and other types of adjustments, Adam in this case doesn't have any, right? So his next page is pretty straightforward, right? He doesn't have any non-refundable renters credits or other credits, other kind of services tax, AMT. He just has his California income taxes withheld. That's coming from his W-2, $5,000. And so when we get down to the next section for use taxes and then the either overpaid or underpaid tax due, doesn't owe any use tax for this year. And he did have full health coverage for the entire period. This is really important because California requires health insurance coverage for its residents. If you don't have health insurance coverage, you are subject to a penalty. So that's the individual shared responsibility penalty. But there are exceptions, right? So if you don't have coverage, you are generally subject to the penalty, but if you meet an exception, you won't be penalized. So we have $5,000 in total payment balance. And remember, $5,000 with tax was withheld. The amount of tax that he actually owed is $3,970. So if we subtract the two, his overpaid tax or his tax refund, in other words, for California tax purposes, is $1,030. So this is the amount of tax that he will get as a tax refund from the state of California. And then on the next page here, it gives you some options to be able to either apply the refund to your next year's tax, get the whole amount of tax refunded to you, or you can contribute it to charitable groups. So if you want to contribute some of your tax refund to one of these types of charities, you can go ahead and do that. If not, just go ahead and report in section 115 that you want the full amount of tax refunded to you, and they can either send you, paper check or have the refund direct deposited into your bank account. All right, and then of course at the very bottom there, you want to sign the return, date it. If this is a paid preparer, the paid preparer information would be down there as well. And then that's it, right? This is pretty straightforward, simple example for a California resident. Obviously, every tax situation is unique and different, so always be sure to read the full instructions, consult with a tax preparer if you have any uncertainty about what you need to do. And that covers it. So remember to send this off to the state of California, attach a federal return, very, very important. California wants a complete copy of that federal return, and then you should be good to go. All right, thanks so much for watching, and have a good one, and I hope to see you again soon. Bye.